All right, good evening, good afternoon, good morning. It is 9:30 in the Pacific Standard Time PM, and I'm going to get started on another dollar pair, which is the pound dollar. Here is my daily. Now, this particular, if I start back to the left, the drop here last year was Brexit, and this completed a possible wave 3. As an alternate, I'm actually just starting to label my alternates as well, just so that we can get a different perspective of what this market could be. So with that being said, currently my primary is that this is in wave 3. This ending, the end of Brexit and the whole move down from like 150 to the current 119 ended wave 3, which is the current low. You have a 3-wave move up here for a W. You have another 3-wave move down for an X. However, I do have an alternate wave 1, which will be bullish, and my alternate also wave 2, which is also a bullish pattern. But let me just to eliminate the confusion, I'll make sure I put alternates there. But let me go with my primary first, and then I'll tell you what I'm thinking as an alternate count. So this will be the W, CX, and then this would be an A, B, and then you have a 1, 2, 3, 4, 5 for C, basically, for a Y, basically, and I would basically put this as C. Actually, I'll put Y, and then I'll put a C, and let me move this 5 out the way a little bit. Basically, let's do it like this. So I'll put the 4 up a little higher. Put that there, and I'll put this here. So with that being said, if that's a 5-wave move up or an ABC of Y, a WXY retracement for wave 4 on a daily, then right now I can count 3 waves from the top. So from the current top at 136.60 or so, yeah, you can count. It'll be a drop from 1, then 2, and then this will be 3 here, 4 here, 5 for 3, and then what this likely is here is wave 4, which just went just above the wave 4 of 1 lesser degree, where you see this particular previous 3289, a previous top, which will be counted on a daily. You can count it as a wave 4, and we'll go down to a smaller time frame in a bit. But if that's the case, well, then I'm going to expect another wave down. So that's just looking at the daily as a primary. As an alternate count, it would actually be you can, so an alternate count will be that the wave 5 ended here and ended right here, and now you can count this entire move up can either be wave 1 for a larger degree, which will basically be, this would be the wave 1 here. So you would need to go from here as a 1, 2, 3, 4, 5 for 1. That's on the alternate. Then you have a A, B, then a C for W, A, B, C for X, and then a A, B, C for Y of an alternate wave 2. And now you have a 1, 2, and then you have a 1, 2. It'll be a 3 here, 4 here where my 2 is at, then 5 here for wave 3, and then wave 4 would be here, and then you have wave 5 of either a 1 or an A, a larger A. So if this was the particular, if the 5 was here and this completed a 5-wave move, well then this particular move up here will be a 5-wave move for a larger A on the alternate. So instead of this being a 4, this will be an A. So you're basically looking for basically an ABC move correction before you start the trend back down. So let's look at that alternate on a weekly time frame so that you can get a better picture of what I'm basically trying to explain here. And this is just an alternate. My primary is still to the downside, but let me look at the weekly. And as you can see on the weekly, we would basically have, this would be the top. You have the 1 A, B, C for 2, and then you can do 1, 2, 3 here, 4, or actually be 3 here, 4, then 5 for 3, and now you have an A, B, C, a D, and an E, which is this whole thing will be a triangle for wave 4 here, and now you have a wave 5. And this particular wave 4 is about the same proportion of this particular wave 2. So with that being said, as an alternate, you would have where my 3 is will be a wave 5. And then now you would pretty much count 1, 2, either 3 here, 4 here, or 3 here and 4 here, and then you account a 5-way move up for a large A basically. And then from here you would see prices moved, and this will be possibly a A of a B basically. So this particular drop from the current levels of that top at 136.60 or so to the bottom, this will be A of B, and now you're working on B of B, which we wouldn't know if it's going to be in a triangle or not. But if it is working in B, and this particular alternate is the correct count, you would need to see prices find some support around this 126 level for that to be well, yeah, that probably will be about 50%. Let's see here. Let's see if a retracement from the 3 and to the top. So 0.618 is here. So if it would be wave B, then yeah, 127.72 or so. If not, right between 50 and 6.8, more towards 126.50, 126.40, somewhere around there. Most likely, probably low 126. Now, in that case, then that will be the wave B, and then you'll see a wave C that will pretty much go back to the levels just before Brexit started, which will be at around 150, 148 or so. And it is possible. So it's just something to keep in mind. Right now, I'm showing that my primary is that this is the top of wave 4, and now we should be expecting a 5-wave move down to go below 119. And however, you always want a primary and an alternate count. So I'm giving you a bullish count and I'm giving you a bearish count. Right now, my primary is that the dollar is going to continue strong, and this particular drop, it was a 3-wave move drop, and as of right now, we do see some correction, but we should see one more drop to about 120, a little under 129, and that will complete the wave 1 of 5. However, if prices continue up, then I will start. I would need to actually to look into my alternate. So if you go onto a 240, I'm just trying to give you the best possible scenarios. If this is wave 4 at the top, well, you can have a 1, 2 basically, and then you have a 1, 2, 3, 4, 5 for 3. Or as an alternate, you could have a 5-wave drop down for A, and then this was about a 0.382 retracement of B, and then you have a wave C. But if this is an A, B, C, then basically this particular wave up here would be wave 1, basically, and you would have to do 1. The 2 would probably be right here, so this would have to be 1 here, A here, B here, C for 2, and then maybe 3 here, 4 here, 5 here for wave 1. And then at that point, you would be expecting this particular low to remain intact. Maybe it'll push down to 130, 134 or so, and then you will need to see prices go above 133. But one of the main reasons why I'm sticking to my dollar bullish, which will basically be pound bearish, and my short, I actually just went short a few minutes ago, right near the support levels. I'm anticipating, I am anticipating a break below this particular support level of around 132.82, and I'm anticipating it to go a bit lower. However, my stop is tight because this could go a different way, and I want to make sure if it does go in the bullish direction, then I can trade the pullback once it actually comes back down, because if it does get to around 132.20 or so, it will at least give me an indication that the bearish pattern is somewhat invalidated, and I can then look for longs basically, and not shorts. So I hope that gave you some perspective on what's going on in the pound. And let me now turn to the euro, which I spoke about on Monday. And as of right now, this is a weekly. There's really not much to really discuss on the weekly. Is this other than basically this is currently the top of wave 3, and it is possible that we're currently in wave 4 that has the potential to go just below 115 or just below 116, if not lower. And if that's the case, it's better to look at it on a smaller time frame. So let me go down to the, I don't want to do it monthly at all. Let's see. I want to go to a daily. Let's see. So going to a daily, you can count the 1, 2, 3, 4, 5. For 3, you can see the triangle. This is basically wave A. You can see the triangle wave B. And now you can pretty much count this as a 1, 2, and now we should be in start of wave basically 3 of a 5-wave move for wave 4 basically. So this will be the A, this will be a B, and then you see a 5-wave move, which was a 335 pattern for wave 4. And as of current, I have wave 4 coming down to a low 115 by 115.20, give or take. So with that being said, let's look at the 240, just so we can really, and now look at a 60 too, so you can just get a little bit more perspective. Right, 2 days ago, I actually said it needed to break the support levels of, I believe, 18. I think it was around here somewhere, or about 2 days ago. I've been short since Friday when it went up to about 1875. I got in at 1862. I think it went up to 1885. Right here, basically, I got in once price came down here. My stop was up around 1920, I believe, and then I believe Monday, or actually Sunday, this spike Sunday at around 2 There was some report coming out, so it spiked up, but it actually found resistance just before the top, and it made a double top. And then I basically lowered my stop at that point, and I was just focusing on prices going below 1800 and then making its move below 1780. Once prices broke 1780, I lowered my stop to 1800, and then it actually found some support below I was looking for it to find its support at 1725. It found support at 1735, 34 or so, and then you saw a small spike up, but then it found its resistance near 1780. So at that point, I lowered my stop to around 1787, because if it goes above 1785, then there's a good chance that this may be a low, and this can actually be the wave 1, basically, and this will be a wave 2 versus this being wave B, and now we're going to see a 5-wave move down. So with that being said, the primary that I have in the euro is still as I had it 2 days ago. I have this as a top of wave B, and now I'm expecting a 5-wave move down near the 1530 level, 1.1530 level. There is a report, and Mario Draghi will be speaking within the next 4 hours. So I am expecting price to do absolutely hardly anything for the next couple of hours, and then at around 1 a.m. Pacific Standard Time, which will be about 8 o'clock or so in the European time zone, when he speaks, during his speech or after his speech, this is where I expect volatility to occur. With that being said, this is why my stop will remain here. And as long as prices remain under 1775, I have somewhat a bit of confidence that price would actually break down and continue to lower levels. But it would need to break the 1735 and go more towards 1700 for this particular pattern to be a little bit more clear. Um, and for me to really have more confidence in the fact that it would reach the 1500 level. And last but not least, I'll just look at a 60 minutes so you can get a little bit more of a clear perspective. If you look at it on a 60-minute time frame, you can clearly see here's the top, and you can count possibly a wave 1 here, A, B, C, 2, no, I'm sorry, 1, 2, 3, 4, 5 for 1, and then I have a B, expanded flat B, and then you can see a spike up for wave 2, and then I have a 1, 2, I have a 3 here, 4, 5 for 3, which ended at 1735, A, B, and then 1, 2, 3 for C of 4, which went just above the Chamorro clouds, and then now I'm expecting a move down. However, this here, what needs to happen with the Chamorro clouds, if I'm reading it correctly, is once it once it tightens up, it needs to expand out. And if you don't understand what that means, let's take a look at what it did previously when you saw something like this as it gets narrow, when it was going short. I think it was right. I think it was right here, as prices. It was kind of. No, that wasn't it. I saw one and now. Oh yeah, right here I think. So as you can see, if you look, let's see if you can look. But see, that's bullish, so we didn't look for a bearish one. Let's see, bearish. I saw one. I may have saw it on a different time frame. Um, Either way, it's really no biggie. The Gann fan support and resistance lines seem to be working pretty good based on the previous low here at 1670 or so, and it did break through. And right now you can see it's just finding its little groove, but just a few hours ago it was about 10 or so ticks higher than current levels, and it's looking like that move to the downside is slowly starting, because I think I was up only around 80 ticks. Now I'm back up to about 98. So at this point, my stop will go to about 1780. You know what? I'm gonna keep my stop at 1787, because if it breaks this high at 1782, it may find more resistance between 1782 and 1785. I don't want to get popped out prematurely, and at the end of the day, I'm already, even if I got popped out at 1787, it'll be more than 60 ticks that I'll take away. And if this low is the bottom, well, if it does do this, come here, and then, let's say it shoots up to like 1815, I'll still be able to get in on a pullback more towards 1800, 1780, and catch it, because if this is the low, well, prices still need to go above 1876 for it to be any considering move higher than that. It needs to go above 1900 actually as one of the other resistance levels. So I have time to get in. So I'll lock in these profits, and I would take positions long. Right now, my primary is to the downside, and if correct, price would need to fall more towards the 1500 level to either be done with wave 4, or it's possible that that top is not wave 4. That top um, the top is complete at wave 4, and then we're basically expecting a move down that would go below 103 on a weekly and a monthly time frame, which is an awful lot of ticks. And I think on like the super cycle, that will be the end of wave C basically. So we're working on a wave C on a very large time frame. uh, that's what I want to end it on. If I can pull up a monthly, basically on the Euro monthly, this will be the A here. So on a monthly time frame, this will be the A. So let's do that. This can be a possible triangle where you have the A here, B here, C here, D here, and then E here for B. So it's a possible triangle here, which, let me show you that. Let's see. It will be basically the triangle there. The problem with the triangle, with this being a triangle, would then price will be done here, and this will be the C. So I doubt that that's the particular case. I think this is an A, this is an A, B, and then possible truncated C for B here. And then you have 1, 2. So then basically you have 1, 2, clearly a 3-wave move down. I mean a 5-wave move down for 3, and it's impulsive with all those red bars. So then you got 3, and then you basically have wave 4 that if you called it right, then price will pretty much be in the territory of wave 1 right there. So another way to look at this is, I was speaking with a friend of mine the other day. Instead of putting the 1 at the top, at the current bottom, this 1 could also be labeled here. And now you have a expanded flat wave B. So you, from this top, you have a 1, 2, basically 3, 4, 5 for 1. You have the A here. You have an expanded flat 3-wave move here for B, and then you have a 3-wave. You have a 1, 2, basically 3, 4, 5, which this will be ending diagonal C for wave 2. And then with that being said, price is not with this wave 4 will not be in the territory of wave 1, but it also gives it more room to the upside. So that if we are only in wave 3 of wave 4, basically, and we're currently working on wave 4 of 4, then we would expect one more move up to around the 2350 area, which still gives us room. If you look here, it would need to go to around 26, mid 26, to invalidate if the wave 1 is here. If wave 1 is here, it's already right there in the territory of wave 1, which is an invalidation. So it couldn't go any higher, and this would need to be right. This will need to be done, pretty much. So with that being said, it's safer to put the wave 1 here on a monthly time frame, and then from there you pretty much got to move down to where, if you use the Fibonacci, basically where A equals C, then now you're talking. I don't want to make this thing too long, so I'm gonna end this really quick. But you're talking, if this is the A and this is the B, I like to see it go 1.382. So 138.2 or 0.618. But prices do have the potential to going more closer to 98, and that will be lower than the 104 or 103 here. And that will be wave 5 of wave C. And then over the next course of a couple years, basically you're going to see like this just huge correction in a dollar weakness over the course of the next few years. So this is just something to keep in mind as a broader perspective. But right now, just to end this one more time, we start on my 240 just to give you, just in case you forgot. I am expecting prices to go to the downside. And we'll see tomorrow once I post another video. If I get stopped out, I'll be looking to go long at some point, most likely by Friday, if I see some volatility. But right now, I'm expecting price to continue lower. Any questions, please leave comments. Other than that, happy trading.